Good morning, students. Welcome back to the session on audit. Today we are going to start with a new chapter, and that is about public sector undertakings, PSUs as are commonly called as. In respect of PSUs, there are certain criteria which are required to be followed when it comes to the audit. There are certain special provisions, or you can say there is a certain different approach which is at times required to be applied in terms of the auditing techniques because of the way the PSUs are structured. So today we are going to have a discussion around that as regards the audit of PSUs. So let us first of all get into an understanding about the types of PSUs which are possible, and what are those PSUs, how do they generally operate, what is their governing mechanism. All of these aspects will first of all have a discussion on the PSU, and then we'll get into further details as to how the audit of PSU is required to be performed. Now, when it comes to the PSUs, or in simple terms, we can say currently we are now talking about those companies which are either fully controlled or which are partially controlled by the government of India. And when it comes to the government of India, so it's not limited to the central government or state government. So there are other governmental departments also. So let's understand about that. So what is this government of India, or what is this ownership which a company may have in terms of its structuring, because of which it will be considered to be a PSU to be falling under the provisions which we are going to discuss in respect of the audit. We can say PSUs are those companies or those entities, those undertakings which are owned either fully or controlled either fully by the central government or any state government or the governments. Means it can be a combination of state or central government, or it can be by more state governments. So that could be various state governments which are having ownership towards this. Talking about the PSUs in terms of their setup, PSUs, even though they operate for a commercial purpose, they are generally not set up with a commercial objective in mind. Let's understand. If we talk about any government company, what is the objective with which that government company or that PSU will be established? That will be the public interest. Or you can say eventually those entities which have been established for the benefit of the public, for the public interest. And that's why their focus will not be only on the commercial aspects in terms of the business they will do, but the focus will more towards the benefit or the public benefit. That means the objective with which they have been established. Yeah, so can you understand the difference between the objectives of setting up of this type of organization as compared to, say, any other private limited company? Private limited company is something which is set up with a commercial objective in mind, with a profit objective in mind. They will also be involved in some public interest objectives. They may also be involved in some objectives which could be beneficial to public at large. But that's not the only objective. That's not the main objective which they have. But when it comes to PSU, they will always have this public interest as the basic fundamental. So some of the companies which could be operating like a PSU could be, say, IOC, to name a few, Coal India, right? IOCL, BPCL, There's so many companies say. So when it comes to petroleum, so we have IOCL. When it comes to coal, it's about Coal India. When it comes to Steel Authority of India Limited, it's SAIL. Similarly, there are so many PSUs. And PSUs again could be of various sizes, depending on the nature of operations they will have, depending on the types of projects which are allocated to them by the government. So basically, we can say it's a part of the government which is involved in some public interest activities in the form of a company. So that is what we call as a PSU. Okay. Now considering this structure which is given to the PSU, the audit objectives are also required to be assessed, and accordingly the audit approach in case of PSU will also have to be structured. Yeah. Now moving further, let's get into an understanding about the government company. So we have talked about the PSU, and PSU, as we mentioned, is one of the structures, or is one of the form through which a company is established by the government. And there is another type of company which is purely a government company, which will also fall under the purview of our discussion today when it comes to the PSUs. So let's understand about the meaning of that government company now, and we'll also compare PSU with a government company, and will then understand the requirements related to audit in all of them. So now, what is a government company? Government company, we can say, is a company in which not less than 51% of the paid up capital is held by central government or by any state government or by central government as well as state government. That means a combination of these two. Or it could be partly by various state governments, or which may include a company or a subsidiary of a government company. Yeah. So in this scenario, what do we get? A company which is a subsidiary of government. And what is this government? Now this government could be central government or state government, or it could be either of them. Correct? So that is considered to be a government company, means something which is fully controlled by the government of India. Now, as regards the PSU, now even though we don't call a PSU to be a government company in a very technical sense, PSU is definitely a different company. But as regards the overall objective with which this is established, PSUs and government companies will be having the similar types of objectives. Secondly, the way those are structured. Will also be in line with the requirements of the PSU. So that means the way government companies are structured, the way PSUs are structured, both of them will have similar sort of objectives. So let's now get on to the understanding related to the audit of these types of companies. Now, as regards the audit of government companies, this is performed by an independent authority, and this arises through the Constitution of India. And what's that? Excuse me. Sumit is asking, sir, are all the PSUs government company? No. You can say that in a way it's a single type of bucket, but definitely all the PSUs are not government company, and all the government companies are also not PSUs. These are two different categories. Because when it comes to a PSU, they may have some stake which could be of other sort of authorities also, other than the central or state government. Okay. And as we move further into our discussions, you'll get more clarity around this concept. Huh? Okay, now when it comes to the audit, so let's understand which authority do we have which is responsible for the audit or which is responsible for getting this audit done. Now, this is another very important part of this PSU setup or this government setup. That audit of government companies is performed by an independent constitutional authority that is called as C&AG, Comptroller and Audit General of India. And this is done through the Indian Audit and Accounts Department. The Constitution of India gives a special status to the C&AG and contains provisions to safeguard his independence. You can say a separate body has been established. Which body is that? It's a separate authority, C&AG. And it's the C&AG. Okay, it's the C&AG which is responsible for the audit of all of these government companies and even for these PSUs. So they may not be doing the audit themselves, they may be getting it done, but the responsibility towards the audit, and when it comes to this audit, we are now talking about the statutory audit. Statutory audit means the audit of the financial statements of a government company or a public sector company. So let's understand some of the powers which are assigned to C&AG. Article 148 to 151 of the Constitution prescribes the role of C&AG as follows. Appointment of C&AG by the President. Special procedure for removal of C&AG only on the ground of proven misbehaviors or incapacity. So C&AG is not a body which can be just removed by citing any reason. So there have to be good reasons. So it's a very important authority which plays a significant role and which is something in terms of its existence cannot be challenged, which cannot be removed by anybody by giving any sort of reason. Okay. Salary and other conditions of service to be determined by the Parliament. Okay. So some of these aspects are taken care of by the Parliament because the government is involved. So that's why you will see the ministries getting involved, the President getting involved, or the Parliament getting involved. Now, as regards Article 148, perform such duties and exercise such powers in relation to the accounts of the Union and the states and of any other authority or body as may be prescribed by or under any law made by the Parliament. C&AG Act 1971 defines these functions and powers in detail. On the advice of C&AG, President will prescribe such form in which accounts of the Union and state shall be kept. So that means the basis of preparation of the books of accounts is again as per the requirements of C&AG. So they will be responsible for this. Audit reports of the C&AG relating to the accounts of the central or state government should be submitted to the President or the Governor of the state, who shall cause them to be laid before the Parliament or the state legislative assemblies, depending on whether it's related to the central government or whether it's related to the state government department. Okay. Yeah. Now moving further, talking about the powers related to C&AG and as regards their role in more detail, because this is going to be the most important aspect for the purposes of our discussion. What's the role? C&AG shall hold office for a term of 6 years or up to the age of 65 years, whichever is earlier. He can resign at any time through a resignation letter addressed to the President. The Act also assigns the duties regarding the audit to be followed by the C&AG. So the number of organizations that become subject to audit of C&AG is very large, and let's understand which all organizations get included. And now herein you will see various types of organizations will get included. And you will see some linkage of all of these types of organizations to the government or the government department. First, all the union and state government departments and the officers, including Indian Railways, Posts, Telecommunications, all of these offices, all of these departments, they are subject to the audit by the C&AG. Next, public commercial enterprises controlled by the union and state government, that is government companies or corporations. So these are public commercial enterprises, and by the commercial term, don't get confused. It simply means that these are some companies which have been established for certain operations, which could be commercial in nature, but these are completely government owned. Non-commercial autonomous bodies and authorities owned or controlled by the union or the states. Authorities and bodies substantially financed from the union or state revenues. So these could be either set up by the Indian government or the state government, or they may be substantially financed by the government department. So most of these organizations, therefore, you will see are the ones which will have some linkage with the government. Okay, as regards their coverage regarding the audit to be captured in respect of the requirements of the C&AG. Okay, now as regards some of these requirements related to the audit, what I will do is I will take you to the role of the C&AG. So let's understand what will be the role of the C&AG in relation to some of these requirements related to audit. And then we'll get on to the detailed understanding about all of those audit procedures and which are required to be applied in sort of different manner when it comes to the statutory audit. Okay, so let's understand. Now, what's the role of C&AG? As we have discussed, it's all about C&AG which will be playing the role in terms of monitoring the audit, in terms of supervision of audit, or in terms of getting the audit done of all of these government departments or the PSUs. C&AG plays a key role in the functioning of the financial committees of the parliament and the state legislatures. He has come to be recognized as a philosopher, friend, and guide of the committees. So let's understand some of the roles he has been playing. His reports generally form the basis of the committee's workings, although they are not precluded from examining issues not brought out in his reports. He scrutinizes the notes which the ministries submit to the committees and helps the committees to check the correctness of the submission to the committees and the facts and figures in their draft reports. The financial committees present their report to the parliament or state legislature with their observations and recommendations. The various ministries, departments of the government are required to inform the committees of the action taken by them on the recommendations of the committees, which are generally accepted, and the committees present action taken reports to the parliament or the legislature. In respect of those audit reports, which could not be discussed in detail by the committee, written answers are obtained from the department or the ministry concerned and are sometimes incorporated in the reports presented to the parliament or the state legislature. Now, this ensures that the audit reports are not taken lightly by the government, even if entire report is not deliberated upon the committee. Why? Because there is a separate authority which has been set up. And what's the role of that authority? That role is to supervise all of these activities. Yeah. So that's why That's why we can say there's some check, there's some mechanism which has been established. And please remember that because it's the C&AG, and considering the role that the C&AG will have to play, this body has to be independent. And as regards the independence will carry the same meaning in relation to any organization that it becomes subject to. Okay. Yeah. Now, talking about the audit requirements. Now, as regards the audit requirements, there are certain aspects which we need to understand first of all in relation to the PSU, and then we'll get on to the audit procedures in more detail. So let's understand those elements or aspects related to the audit of a PSU. See, when it comes to the audit of the PSU, we can just broadly segregate that audit requirement into three categories. Though I'll come to all of these three categories in more detail. One is the financial aspect. Financial aspect means it's all about the financial information. Second is the compliance aspect. If you remember, we have had discussions around the compliance audit in our previous sessions. So it's largely towards that. Compliance means it's all compliance oriented. Means the various compliances which are related to that particular entity or the organization are the areas which the auditor is going to focus on. Performance is the third category, which we haven't really discussed at all in terms of our discussion so far. And with performance, there's another angle which will come over in relation to the audit of the PSU, and that is called as propriety. So this is not really related to the financial information. That means we are not going to limit ourselves to the financial statements of the PSU or maybe the government department. We'll not be talking about only the compliances which are related to the areas which may impact the financial statements of the entity. And we will also not be limiting ourselves to anything which will have an impact on the financial statements. It will go beyond that. So it may go on to an aspect as regards the performance of the organization, as regards its various activities which it might have taken up, as regards its commercial activities, as regards its social activities, or you can say at times the very purpose of picking up any activity. That is called as performance audit. And in terms of the performance of that set of activities or that particular activity is required to be evaluated by the auditor. And this is one area which is you can say is distinct from what we don't see in case of companies which are other than PSUs or companies which are other than government departments. So this is one area which get attached to the audit of the PSU and which can also say is a distinctive feature and which is not required to be taken care of in other companies. Though it's not completely true. At times there are certain such areas which are picked up, but it's not something which is a mandatory part or which is not something which has been separately covered in terms of getting it done. Or you can say, even if to some extent, if it gets picked up, let's suppose in case of a statutory audit of a private company, certain aspects around the propriety are picked up. Let's suppose, even if those are picked up, because there are certain areas where the propriety areas are also picked up, then those propriety areas are not that extensive, which are required to be performed over here. Okay, so that's why I'm saying this third part, performance or this propriety part, is something which we'll have to discuss in more detail as we move further. Now, moving on to the requirements related to the audit of the PSU. So we can say PSU or the audit of PSUs can be said to be comprising of three basic elements. Let's understand what are those three basic elements. First, the auditor, the responsible party, and the intended user. So the first part is towards the parties which are involved. And who will be the party? First party will be the auditor, second party will be the responsible party, and third party will be the intended users. So let's understand about three of them. Now, who is the auditor and what's the role? The role of the auditor is fulfilled by the Supreme Audit Institution, India, and by its personnel delegated with the duty of conducting audits. C&AG and Indian Audit and Accounts Departments functioning under him. C&AG and the Indian Audit and Accounts Department functioning under him constitute the Supreme Audit Institution of India. So you can say auditor is the one who will be auditing the financial statements. Second is the responsible party. Now, who is the responsible party? The relevant responsibilities are determined by the constitutional or legislative arrangement. Generally, auditable entities and those charged with governance of the auditable entities would be the responsible parties. The responsible parties would be responsible for the subject matter information, for managing the subject matter, or for addressing recommendations. So you can say, in terms of the auditor, if I have to relate this to the one which we used to see in case of private limited company. So we have one auditor over here. Yeah. Then the next one is those charged with governance, we can say. Okay, and this is the one who is the responsible party considered. Third is the intended user. Who are the intended users? Individuals, organizations, or the classes thereof for whom the audit report is prepared. So you can say the users of the financial statements. Okay, because we are clear with some of these terms, so that's why I'm just trying to link some of these terms in the context of a PSU with those terms which we have already discussed when we discussed about audit of the financial statements. Okay, next thing is the discussion around the subject matter, criteria, or you can say the subject matter information. So what is the relevance of this? So what is the subject matter? Subject matter, we can say it's the information or the condition or the activity that is measured or evaluated against certain criteria. You can say these are the benchmarks used to evaluate the subject matter, or subject matter information is referred to the outcome of the evaluation or the measurement of the subject matter against the criteria. So let's understand this subject matter and the criteria. Now, in very simple terms, if we have to understand about the subject matter and criteria, we can say, let's suppose this is the accounting which has been done. Yeah, this accounting needs to be done as per the accounting standards. So whenever the accounting will be compared, against what should that be compared? Accounting standards. So in such a case, what will become the subject matter? Subject matter can be considered to be the accounting, or for your purposes, you can say the financial statements, or the financial statements. And what should be the criteria against which this needs to be evaluated? Accounting standards. Because that's the benchmark. That's the benchmark for doing the accounting. Clear? Third aspect in case of audit of PSU could be the types of engagements. So let's understand these types. And what do we mean by the types of engagements? So we can say there could be two types of engagements. One is the attestation engagement and second is direct reporting engagement. And let's understand about attestation engagements and the direct reporting engagements. In the attestation engagements, the responsible party, who's the responsible party? These are the responsible parties. Measure the subject matter against the criteria and presents the subject matter information on which the auditor then gathers sufficient and appropriate audit evidence to provide a reasonable basis for expressing a conclusion. Okay, it's like audit. As regards direct reporting engagement, in case of direct reporting engagement, it is the auditor who measures or evaluates the subject matter against the criteria. As against attestation engagement. So let's get on to the attestation engagement once again. The responsible party measures the subject matter against the criteria and presents the subject matter information on which the auditor then gathers sufficient and appropriate audit evidence to provide a reasonable basis for expressing a conclusion. So in case of attestation engagement, the responsible parties are doing the first part, and which is then further substantiated, which is then further worked upon by the auditor, as against the direct reporting engagement, wherein the auditor is doing this job directly. For our purposes, we don't need to get into too much details around it. Yeah, but as regards our understanding for this point, we can say financial audits are always attestation engagements. So if we move into this third part, so there were three parts for the PSU audits. So if we have to talk about attestation engagements, we can say financial audits will always fall over here. Financial audits, you can just simply say, could be the one which are related to the audit of the financial statements. Yeah. But when it comes to the other two types of audits, performance audits or the compliance audits, they would generally be falling under direct reporting engagement. Direct reporting engagement, you can say compliance audit could be the one which may be falling over here, or you can say performance audit could be the one which may be falling over. Yeah. So basically, this brings us back to those three types of audits which we discussed briefly, and then we moved on to the various aspects related to the parties which are involved in respect of audit of the PSUs. So now we'll have to go back to these details to understand about all of these aspects in more detail. Yeah. In the meantime, if you have any questions, you may please let me know. So now, what I'm going to do is, I'm going to pick up this aspect on the basis of three parts, or you can say three types of activities which an auditor would be required to do in case of a PSU. And that again comes down to financial audit, compliance audit, and the performance audit. Yeah. So we are now starting with all of these one by one. So let's understand about the financial audit. What is it that is required to be done in case of a financial audit? How is this audit required to be performed? What all aspects are required to be considered in case of a financial audit? And how will these be different from the one that would have already been covered by us? Something which we would have discussed earlier. And this is something which, to your surprise, will not be very significantly different. So what is this financial audit? Let's understand. Financial audit is primarily conducted to express an audit opinion on the financial statements. And you may be thinking, but sir, this is exactly same which we discussed in case of audit of private companies. It's the same thing. Therein again, the auditor is required to express an opinion on the financial statements. Exactly true. So when it comes to the financial audit, it's all about auditor expressing an opinion on the financial statements. The only thing is the underlying entity. Earlier, whenever we discussed, we were not specific to a PSU or a government company. Now, for the purposes of our discussion today, we are specific to a PSU or a government company. But when it comes to a PSU or a government company, will it make our approach different as regards the audit of the financial statements? Not at all. And this is something which is important for you to understand. Okay, so that's why let's come back to this point. Now, this is an important part of our discussion. So we are talking about financial audit. And then we also will be talking about compliance audit and then the performance. What we have tried to do, we have tried to break the audit requirements of a PSU into these three categories. Or you can say, in a way, we are trying to say that audit of a PSU will cover these three activities. And again, we have not discussed whether all of these three activities will be covered always or it's only in some of the cases. For the time being, we are assuming that all these three activities will be covered by the auditor of the PSU. Now, as regards the PSU, one thing which we have additionally understood is that this aspect is something which is different in case of PSU. This aspect could also be different. But when it comes to the financial audit, it's exactly same. There's no difference as regards the audit which we would have done when a private company would have been involved, or we can say a company other than PSU would have been involved. So that means you need to go back to all of our previous discussions, all the previous sessions, wherein all of those auditing standards that we discussed, all of those requirements related to each and every such area, whether it was about inventory, whether it was about estimates, whether it was about any sort of special item requiring confirmations, whether it was about materiality, whether it was about obtaining management representation letter, whether it was about entering into an engagement letter before starting the work, whether it is about maintaining independence, whether it is about checking the eligibility conditions, all of these aspects will remain exactly same when it comes to the audit of the financial statements of a PSU. So nothing is changing as far as audit approach is concerned. Okay, so I'll say this is audit of financial statements, and the approach as regards this part of the audit. I'm not talking about these two other parts of the audit. I'm talking about only this part of the audit. This approach remains same. And by same, I mean to say something which we have discussed in our previous sessions. Okay. Now in this case, the objective of the auditor is what? Expression of an opinion on the financial statements, that whether the financial statements are free from material misstatements or not. Correct? That is something which is the objective of the auditor. And this would help enhance the degree of the confidence of the intended users in the financial statements. Because why is this audit being performed? I'm talking about this audit only now. Why is this audit being performed? So that the users can place reliance on the audited set of the financial statements. Correct? Now, C&AG shall express an opinion as to whether the financial statements are prepared in all material respects. Please remember, in all material respects, in accordance with the applicable financial reporting framework. And the applicable financial reporting framework for PSU will not change. This will also be the same set of accounting standards which will apply to any other company, with certain exceptions, of course, at times, depending on the industry which is involved. In case of financial statements which are prepared in accordance with fair presentation financial reporting framework, where the financial statements are presented fairly in all material respects and they give a true and fair view in accordance with that framework. So do we see anything different over here? Not at all. Everything, if we just understand the objective, if we just see the outcome which the auditor is required to provide, what is that? Opinion. And this opinion is exactly same. There is no change in the opinion. This is not true and correct. In the opinion, true and fair view is required to be commented upon. True and fair view is required to be commented upon. Yeah, it's same. There's no change. Can we see this? So what do we make out? We can therefore make out that this part of the audit you should just consider is exactly requiring application of all of those auditing standards which we have discussed. Application of all the auditing standards which we have discussed. So basically, for this part, we don't need to get into this aspect once again, because this is something which we have already covered. Understood? This is something which we have already covered. We have already discussed about it in detail. Yeah. Now, moving on to the next part of the audit. Next part of the audit is again not very different, but yes, of course, it has certain provisions. It has certain requirements which we may not have discussed in so much detail earlier. So that's why we will now move on to this next part, that is about compliance audit. Next is the compliance audit. Now, in terms of compliance audit, let's understand what all is required to be done. So what is this compliance audit? It is once again an audit or we can say an independent assessment of whether a given subject matter is in compliance with applicable authorities identified as per the applicable criteria. Let's understand. We can say there are two aspects which are attached to it. One is the regularity and second is the propriety. What is this regularity? Adherence of the subject matter to the formal criteria emanating from relevant laws, regulations, and agreements applicable to the entity. So in very, very simple terms, we can say if any rule or law is applicable to the PSU. Yeah. For example, format of the financial statements of a PSU has to be as per Schedule 3. So that's a law. Or you can say that's a criteria. And what's the subject matter? Subject matter is the financial statement. Format of the financial statements. So that subject matter should meet the criteria. But this subject matter meeting the criteria is coming as per the requirements of the law. So that's why this has been captured under compliance. Now you may be thinking, but sir, that is something we have already covered over here. So is that a duplication? The answer is no. The only reason why I specified this example under compliance audit was to just to give you an understanding as to what is this benchmark and what is this criteria. Sorry, what is this subject matter and what is the benchmark? For our purposes, we can take another example. Let's suppose every PSU is required to follow certain norm. Let's suppose government says that every PSU, only a PSU, will be required to contribute, say, X% of their profits to the government fund. Let's suppose there is some law like this. So what will be the subject matter? Therefore, the subject matter will be the creation of reserve. And what's the law? Law is about the law which has come from the government as regard that percentage to be contributed to that fund. Okay. Similarly, there could be various legal requirements to which a PSU or a government department may be subject to. That is something which is required to be taken care of. Second is about the propriety element. Now, this is something which we'll discuss in more detail. I'll just touch upon this aspect now. What is this propriety element? Observance of the general principles governing sound financial management and ethical conduct of the public officials. So let me just give you one example of propriety. I think through that example only we'll get the clarity around the propriety. Though I'm sure you must have covered this propriety element at inter level also. But still we can get into some basic understanding about the propriety element. And what is this propriety really requires in terms of an audit? Let's suppose a PSU constructed a building. Okay, let's suppose there's a PSU which constructed a building. Or we can say there are two companies who constructed a building. One company was private limited, second is a PSU. All right. Now let's try to understand what will be the requirement on the part of the auditor in relation to construction of a building. You may also think about certain procedures. When it comes to the construction of the building, What all procedures may be performed by the auditor in case of a private company? Quickly, we want to share some procedures. Please let me know. And then we'll try to differentiate it. And then we'll also try to understand what is this propriety element which gets involved. Yes, quickly. Any thoughts from your side? So let me just share some thoughts. When a building will be getting constructed, so auditor would want to check the expenditure which is involved. How would the expenditure be checked? Through the invoices, approvals of those expenditure. Yeah, we may look into the budgets. Correct. Let's suppose the construction of this building requires rupees 30 crore to be spent. If the auditor would be getting all of these documents, will he be of any concern whether the amount spent is 30, 40, 50? Not at all. Why? Because it's up to the management of the company. They have their funds. Funds are that of the company, which have got requisite approvals in place and which have got underlying documents, all the supporting documents substantiating this expenditure. So will that be of any concern to the auditor? Not at all. Now, let's suppose PSU also constructed a building and PSU spent 30 crore on construction of a building. Okay. First thought that will come to our mind will be that sir, this 30 crore will get covered over financial audit, isn't it? Because in the financial audit will cover this. And when the financial audit will be performed, all of these things will be checked by the PSU auditor. He will also be very happy if he will get the requisite documents, supporting documents, all of these things, if those are in place, he will be very happy with this. He will have absolutely no problem with this. Ambika is saying, sir, 2-3 more things he can check. Whether the accounting has been done properly. Yes, it's done properly. Whether the percentage of completion of work was applied as per the required accounting standards. Yes, that is also applied. Third is whether the payments were made. Yes, the payments were also made. And now the payments are fully done. So everything around this seems to be okay. Yeah. Now, when we come to this type of checking, what is this type of checking called as? Financial audit. In case of a private limited company, this is the part that an auditor would check. But in case of a PSU, there is a propriety element which is attached, which requires an assessment as regards the need for this expenditure. When this building is getting constructed, was there really a need for this building or not? And if this building was required to be constructed, was there really a need to spend 30 crore on this? Or was it possible to construct a similar needed building? I'm saying similar needed building with a budget of say approximately 25 crore. This is called as propriety element. Let's suppose this building got constructed. This building was required also as per the initial requirements. Budget was also up to the mark. Means budget was not excessive. But after its construction, this building has been lying idle for the last 2 years. There comes the propriety element. that if such was the reason, that if the building was not required, then it may appear to be a wastage of money. Or you can say, not an efficient utilization of money. If we don't call this to be a wastage of money, it definitely is not a proper utilization of money. Something is a problem. Yeah. And this aspect of checking by the auditor is called as propriety element, which we see to a very, very limited extent in case of private limited companies, but which becomes a major part, and at times, depending on the scope, depending on the areas which are involved, which may become a significant part of the audit of the PSU. Clear? Clear on this? Clear on this aspect? So with this, we'll now come back to this propriety element and we'll read this again. And I'm just hoping that with this, you'll now get the clarity. Let's read this point. Observance of the general principles governing sound financial management and the ethical conduct of public officials. Okay. While regularity is emphasized in compliance auditing, propriety is equally pertinent in the public sector context, in which there are certain expectations concerning the financial management and the conduct of the officials. This propriety is significantly required. Why? Because all of these entities are the ones which are for the public. So that's why one of the differences in terms of the audit approach, which is required to be seen from the audit perspective, is about taking care of some of these types of aspects. Yeah, for example, this propriety aspect that we discussed. Clear? So moving on to the perspective of the compliance audit. So let's see what's this. Now we can understand this in a better manner. It's a part of combined audit that may also include other aspects. And what are those aspects? Compliance auditing is generally conducted either in relation to the audit of the financial statements, separately as individual compliance audits, or in combination with performance auditing. Okay. Now there is another thing which has been touched upon over here. And let's see. And this is very, very important because this may otherwise become a confusing point to you. At one place we are saying financial audit is different. At other place we are saying compliance audit is different. And at third place we are saying performance audit is also different. Or at least we are saying that there are three approaches of audit. Or you can say there are three perspectives which we need to carry in terms of our audit approach. Depending on the scope, depending on the requirements, what is now required to be understood by you is that financial audit may at times be combined with compliance audit. Or at times, only a compliance audit of a PSU may be required. For certain areas, we don't need to get into those areas right now. For certain areas, it's not necessary that only when the financial audit will be performed, then the compliance audit will also be performed. Maybe a special compliance audit of a PSU may be required. And at times, this compliance audit may also get mixed up with performance audit. Means both these types of audits may be required to be conducted in a combined manner in relation to certain areas, which we'll understand in more detail. And this is very, very important because of the fact that in case of compliance audit, we picked up propriety element. And that propriety element is significantly required to be taken care of in case of performance audit. So what now we will do is, we will now understand what is this performance audit, what all things are required to be covered in case of a performance audit, And then I think we will get more clarity around all of those requirements related to the performance audit, which may get mixed up with compliance audit for the purposes of a PSU. Okay. And this happens to be the most important part of this PSU audit. Because when it comes to the financial audit, we have already discussed. In fact, this is something we have discussed, that it's something already done. Compliance audit, we understand it's not too much, it's all about ensuring the compliances. I think the most important part that we now need to focus on will be the performance audit, and which is the differential part, or you can say the distinctive part in case of audit of a piece. Performance audit. So what is a performance audit? Just give me 1 minute. I think Ambika has a query. Maybe your query is not complete. Performance audit is an objective and systematic examination of evidence for the purposes of providing an independent assessment of the performance of a government organization, program, activity, or function in order to provide information to improve public accountability and facilitate decision making by the parties with the responsibility to oversee or initiate corrective action. We can say now, when it comes to the performance audit, there are 3 ingredients which are involved in this. Let's understand those 3 ingredients. So performance audit, we can say, will be taking care of 3 areas, which are also called as triple E. Or you can say 3 E's. What are those? Economy, effectiveness, and efficiency. So we'll now understand about these 3 ingredients, because in case of a performance audit, or when it comes to the performance audit, only these 3 things are required to be considered. That's it. So what is economy? It is minimizing the cost of resources used for an activity. For example, judging economy implies forming an opinion on the resources. Economy means the cost which is involved. Means whether for undertaking any activity, undertaking any project, the price which was spent or the money which was utilized, whether that was cost effective or not. Okay, so that means when we look at the cost aspect, that is called as economy. Say for example, if you want to buy a laptop, what is one of the thoughts that will be there in your mind while buying a laptop? The price, means the cost which is involved in this. That's not the only thought you will carry, but that's also one of the thoughts. And you would want to buy a laptop at a reasonable price. Okay, it may not be the least price. Please remember, it may not be the least price which is available in the market. It will be the reasonable price, or you can say the best price which you will get for the value which you want to achieve. And for that value, there are few more things which we need to consider. So let's understand about that aspect as well. That comes in the form of efficiency. Efficiency. So what is this efficiency now? Let's understand about this efficiency. It is the input-output ratio. In case of a public spending, efficiency is achieved when the output is maximized with the minimum input, or you can say input is minimized for any given quantity and quality of output. So we can check as to how many resources will be allocated to get the desired outcome. What are the operating procedures which will be involved so that the output can be maximized? So over here, we are looking at maximizing the output. Maximizing the output with the given input level. Or we are minimizing the input at a given output level. We can say for a output level which is fixed, idea is to minimizing the input. Now, how can the output be maximized? That is only possible to be maximized if we require to cut down the input will be through efficiency. Say for example, there's a machinery. That machine is capable of producing say 100 quantities in a day. Okay, that machine is capable of producing 100 quantities in a day. Now what is our objective? That 100 quantities should be produced. So that's our output level which is fixed. Now let's suppose for producing 100 quantities in a day, this machine requires 100 quintals of raw material. 100 quintals of raw material. Now there's one way that we produce 100 output and we use 100 quintals of raw material. This will be the best way to produce this output level. If we want to keep this output level same, and if we want to cut down on the level of input, only then the economy will also be achieved, correct? So what will be required to be done? Efficiency of the machine will have to be improved. We'll have to make this machine more efficient, for which we need to find some mechanism, correct? Yeah, so this is one way through which we can cut this to 80 to produce 100. Yeah, or if we set up this at 80 and we ensure that this 80 produces 100, there again what do we need to do? we need to increase the efficiency level. So it's all about ensuring that there is efficiency in terms of various activities of a PSU. So now this is one aspect which is something not related to the financial statements, because now let's move out of this perspective of financial statements. So we are not talking about financial statements at all. We are talking about the operations of the PSU now. We are talking about their activities, which could be related to anything. So we are talking about those activities, those operations, or those programs of the PSUs which they may be undertaking, whether those have been carried out with economy, whether there was efficiency at the desired level or not. So when it comes to audit of such type of things, it is called as performance audit. Okay. Now in this case, over and above efficiency, there is one more element which is required to be considered. Another very important element which will then help us get a complete understanding of this performance audit, and that is called as effectiveness. So we have ensured economy. We have also tried to ensure that the efficiency has been there. But now, what is this effectiveness? What do we mean by this effectiveness? So let's understand this. Effectiveness means the extent to which objectives are achieved and the relationship between intended impact and the actual impact of an entity. So now, what was the objective? To get 100 quantity. That was the objective which was set up. This objective was set up thinking that 100 quintals will be used. So this was basically the desired efficiency level. This efficiency may or may not have been achieved. Correct? Now, what is the final outcome? What is it that we actually achieve is something which is demonstrated by effectiveness. So effectiveness will tell us that eventually for producing 100 quantity, how many quintals were actually spent. Was this 80, 90, 95, or did it cross 100? Now this effectiveness is also very, very important to be kept in a process, to be kept in any activity, because without this, it will not be able to ensure that whatever we are considering in economy and efficiency will get fulfilled. Okay, so let's understand in auditing effectiveness, what all could be required to be done. Assess whether the objectives of and the means provided, for example, legal, financial, for a new or ongoing public sector program are proper, consistent, suitable, or relevant to the new policy. Determine the extent to which program achieves a desired level of program results. Assess and establish with evidence whether the observed direct or indirect social and economic impacts of a policy are due to the policy or to other causes. Identify factors inhibiting satisfactory performance or goal fulfillment. Assess whether the program complements, duplicates, overlaps, or counteracts other related programs. Assess the effectiveness of the program and or of individual program components. Determine whether the management has considered alternatives for carrying out the program that might yield desired results more effectively or at a lower cost. Very, very important that whether the management has considered different options, applying which better results can be achieved, or applying which same results can be achieved at a lower cost. Because if those options have been evaluated, that is what that will reflect the effectiveness. Correct? Assess the adequacy of the management control system for measuring, monitoring, and reporting a program's effectiveness. Assess compliance with laws and regulations. Identify ways of making programs more effective. Okay. Now, in case of a PSU, this aspect of performance audit is something which gets added to the scope of the auditor. The scope of the auditor may either be only financial audit, may either be only compliance audit, and at times may either be only performance audit. And definitely it's a mix of all three when it comes to the audit of the financial statements. It may not be too extensive in terms of focus on compliance or performance audit when it comes to the audit of the financial statements, but the mix of this will always be there in case of audit of any PSU, or we can say the government department. Okay, yeah. So now, considering this approach around the performance audit, around various activities or around various procedures which are required to be captured in case of a performance audit, we will now get into certain provisions of the Companies Act, and we'll try to understand as to what all aspects of performance audit will be considered and applied in the context of a PSU. Okay, so let's understand about that. Now, when it comes to the Companies Act, C&AG has got the power to conduct supplementary audit or test audit of the government companies. Now, basically, what we need to do is we need to just go back to a part related to the audit of the government companies. Yeah, we'll just try to get an understanding of some of the aspects which are involved in case of an audit of a government company, because both of them are largely same when it comes to government company or the PSU. And with the help of that aspect, we'll come on to this part once again. So let me just take you back to the requirements related to the audit of the government company. We'll just quickly flip through this. We will not spend too much time on this because please remember that we are into the performance audit right now. So I'm just moving you back to some of the requirements related to audit, and then we'll have to come back to this performance audit. Now, in case of PSU, as we all understand, that the appointment of the auditor is by the C&AG. So let me just take you to this window straight away. Appointment of the auditor is by the C&AG. Now, as around the appointment procedure, etc., those are all largely driven by the requirements of the C&AG. In relation to the audit, C&AG will give the directions, the manner in which accounts shall be audited. So the way the audit is required to be done will also be directed by the C&AG. That doesn't mean that C&AG will not require the auditor to follow auditing standards. Those will be followed. There could be certain additional aspects. For example, if we talk about group auditor and component auditor, group auditor gives certain directions, certain instructions to the component auditor to be additionally captured or to be specifically captured during the course of this audit. So same is the course over here. Submission of auditor's report is to the C&AG, including the directions which the C&AG might have given, actions which the auditor would have taken thereon, and the impact on the accounts. So now at one place we are saying CAG will appoint the auditor of the government company. And CAG will give him the directions that this is how some of the areas are also required to be audited. Now what would the auditor do? Submit his report to the CAG. Submit his responses or the actions he would have taken again as per the directions of the CAG. Correct? In addition to this, if we move on to section 143 subsection 6, CAG has a right to conduct supplementary audit or comment upon or supplement such audit report. So there's one audit which we have understood under section 143 subsection 5. Okay, wherein we understand that CAG will appoint the auditor and give the directions. Over and above that, CAG may require the supplementary audit. So you mean to say, so we mean to say over here that something which is already covered on top of that will be done. And further to this, as per section 143 subsection 7, CAG may by an order cause a test audit to be performed. So we have discussed about two more types or two more requirements. One is the supplementary audit and second is the test audit. So let's understand what is the supplementary audit and what is this test audit, which the CAG may require in addition to the normal audit. CAG shall, within 16 days from the date of receipt of audit report, means audit report under section 143 subsection 5, have a right to conduct supplementary audit of the financial statements of the government company by such person or persons as the CAG may authorize in this behalf, and for the purposes of such audit require information or additional information to be furnished to any person or persons so authorized on such matters by such person or persons and in such form as the CAG may direct. So you can say it's a top-up to the audit of the financial statements which is already conducted. Let's suppose CAG believes something is missed out, so you may want supplementary audit to be conducted. Now once this audit is conducted, what will happen? Any comments given by the CAG upon or in supplement to the audit report issued by the statutory auditors shall be sent by the company to every person entitled to copies of audited financial statements. That means it will go out to every member of the company, every trustee for the debenture holder, and to all other persons other than members of the trustee who are entitled to the financial statements in a way. So that means if this supplementary audit is conducted, then the outcome, the report of this will also go out to the users of the financial statements in very, very simple terms. Now let's understand what is this test audit. So this is the third ingredient of the audit. So one was the main audit which CAG requires to be conducted. If CAG believes something is left out, supplementary audit to be conducted. And third is the test audit. So now what is this third audit? Without prejudice to the provisions related to the audit and the auditing. So that means both those audits will remain same. CAG may, in case of a company or in case of certain companies, if CAG considers necessary by an auditor, by an order, cause test audit to be conducted of the accounts of such company, and the provisions of the CAG shall apply to the report of such test audit. So let's suppose there is something specific which CAG requires to be tested in relation to the financial statements, in relation to a company, in relation to the accounts of the company. Then this is another type of audit which the CAG may require. So you can say in a way there are two supplementary audits. One is the supplementary audit which CAG may require after the main audit is completed, and there is one test audit which again CAG may require in relation to the audit of the accounts of the government company. Okay, clear? Now this was just touched upon by me because you remember we were discussing performance audit. Yeah, we were discussing performance audit, and we needed to get into the more details of the performance audit. So now we are coming back to that performance audit. Clear? So we have come back to this performance audit. For the time being, we went to understand the requirements related to the different types of audits CAG may require in terms of the main audit, in terms of the supplementary audit, in terms of the test audit. So now we have come back to our discussion on performance audit. Okay, so let's try to understand this now. CAG is empowered to conduct supplementary audit or the test audit of government companies. Now you can understand this point. Yeah. So let's understand what is the supplementary audit or the test audit. Supplementary or the test audit conducted by the CAG is in the nature of efficiency cum performance appraisal. Generally, this is what you see. Now understood that what's the linkage of these two and how these two will really gel, and why would this requirement come additionally or in addition to what the statutory auditor would have already covered. Generally, this will be the perspective which CAG will carry in mind for getting this supplementary or the test audit conducted. Okay, because the focus of the CAG will be on certain areas which will be towards the efficiency, which will be towards the performance appraisal. So that means the focus of the CAG while getting these types of audits conducted will be towards the performance audit. Now, when it comes to the statutory audit, for the statutory audit, the statutory auditor will submit a copy of his audit report on the accounts of the government company to CAG. Yeah, after which these supplementary audits will be conducted. So let's understand the scope regarding the performance audit. So what will be the objectives of the performance audit? What will be the scope of the performance audit? Now, as around the objective, I think we have had detailed discussion around it. So I'll not get into too much details of objective of the performance audit, because performance audit we all understand what's the purpose, what's the rationale, what all things are required to be done, and what is really expected in terms of the performance audit. In terms of performance audit, CAG would want to know that if the PSU would have conducted any operation during the year, was that cost effective? Yeah, was that efficient? What was the efficiency? What was the efficiency? What was the effectiveness of that type of activity? So that will be the perspective which the CAG would carry. Now, as around performance of such type of audit, again, because it's an audit, which will require various set of activities, So we now need to get down to all those set of activities, all those set of procedures, to understand as to how all of those procedures, how all of those set of activities will be applied in case of a performance audit. Planning for performance auditing, and this is something which is actually not limited to the planning. That will cover whole set of activities when it comes to the performance audit. Let's understand this one by one. So what is this planning? What all will be required to be covered over here? when it comes to the planning, or I should not really call this as a planning. So basically, it's all about the performance audit that we are discussing right now. In terms of the performance audit, the approach which we discussed for the audit of the financial statements, you can say, will largely remain same. For doing any type of audit, whether it is about internal audit, whether it is about tax audit, whether it was about GST audit, whether it was about statutory audit, what was the first thing? Understanding of the entity, understanding of the objective, understanding of the program, understanding of the business. So the nature is required to be understood, without which it will not be possible to perform any audit. Because if we don't know about the item or the underlying item which is required to be audited, can the audit be performed at all? No. Correct? Next, it's very important to have clarity on the scope. So same is the case over here. Here again, a complete clarity over the scope will be required, because if the scope is not known, then what all procedures will be required? What all procedures will be designed? Will that be possible? No. Once all of these things are understood, then the auditor will get a clarity around the item which is getting tested. Or you can say he will get clarity around the audit criteria. He will get clarity around as to what is required to be audited. He will then get a clarity around the approach which is required to be followed. He will get clarity around various procedures which he will be required to perform. Yeah. He may need again a different set of team personnel. He may again need a specialized skill in terms of his team members, because please remember, this audit is not all about the audit of the financial statements. This is something which is completely different from the audit of the financial statement. So that means that for that particular set of activity, the people which have those specialized skill, the people which have those specialized knowledge, the people of the operations may not be the people who have got accounting knowledge would be required at all over here. Yeah, so this complete structuring of the team, this complete designing of the team, this complete skill set, this complete mixture as to what all ingredients will be required to be applied will have to be assessed by the auditor. And when is that possible? Only when he will get into the details. So it's all about understanding of the subject matter. Can we say it's all about understanding of the subject matter? You remember the subject matter we discussed? Yeah. Because without the understanding of the subject matter, can the auditor really plan any of these things? Not possible. Correct? Next. Now, what's the next thing that he will do? Next thing will be all about getting into the audit. Actual audit, wherein he will develop questions, have discussions with the management, understand what all activities they would have performed, understood what all various ways were available, understood the criteria, the benchmarking which the management would have followed, and will also look into the benchmarking which was alternatively possible. Maybe for carrying out any operation, for carrying out any activity, 3 options were available. Management evaluated only 2, but the third was not evaluated. So this is something which the auditor will have to find out. And that is possible only when the auditor will have the knowledge to get into those details, to get into that understanding about that specific type of activity. Okay. Now, with this set of activity level, with this set of understanding level, what will be the objective of the auditor? To test 3 things: whether there was economy, whether there was efficiency, and what was the effectiveness. A mix of these 3, or we can say an optimum mix of these 3. Please remember the fact that it's not possible that the cost will be minimized, or cost, instead of saying minimized, cost is the least. At times, cost may be required to be kept higher. Why? Because only then the effectiveness will be achieved. Effectiveness, you can say, is the quality. Maybe a particular set of activity can be conducted with a cost of say rupees 20 crores. Okay, it's possible to do that activity with 20 crores, but the desired level that we will achieve will not be up to the mark. So will that be of any use? No. But if this cost can be increased to rupees 22 crore, which is still in the reasonable range, what is possible? That the desired level which is achieved is of the right quality. Yeah. So this is where a mix of three E's has to be properly evaluated by the auditor. And that is where the auditor will require a specialized skill. And this is something which goes beyond the audit of the financial statements. Okay. All of these aspects, therefore, will be very, very important when it comes to the performance audit. And generally, whenever CAG would want any supplementary audit or any test audit to be performed, their focus will largely be on the performance aspect and at times on the compliance aspect rather than the financial statements, rather than the audit of the accounts. Because even if it will be focused towards the accounts, it will be somewhere having that performance criteria in relation to some of the activities or some of the operations of the PSU or the government. Okay, clear on this part? Clear on this aspect related to the performance audit which is required to be captured? Now, on this aspect, on this aspect related to performance audit, we can have slightly more discussion after the break in the form of the propriety element. Though we touched upon it, but this propriety element, as I mentioned, happens to be again a very, very important factor or very, very important thing in case of a PSU audit. So that's why we'll spend some more time on this after the break. Okay. So now we can just take a break. If you have any questions, any doubts, you will let me know. All right. Any questions, any doubts? All right. So you just let me know. And let's meet after the break of 10 minutes. So we'll now continue with our discussion on the propriety element. So propriety element is something which we have already touched upon, but let's understand some more aspects related to this. And there is also something which to certain extent is seen in the requirements related to the audit report, and as we discussed that even in case of private limited companies, to certain extent this propriety element exists. So we'll now get into a detailed understanding of all of those requirements related to the propriety element. So what is this propriety element? Propriety element, we can say, is all about verification of transactions, on the tests of public interest, commonly accepted customs, and the standards of conduct. Okay, or in simple terms, we can say, what is this propriety? That which meets the tests of public interest, commonly accepted customs, and the standards of conduct, and particularly as applied to professional performance, requirements of law, government regulations, and the professional codes. Yeah. Now, in case of a propriety audit, the auditors try to bring out cases of improper, avoidable, infructuous expenditure, even though the expenditure has been incurred in conformity with existing rules and regulations. Now, this is very, very important. So, like for example, in a building, we saw that the expenditure of building was fully approved as per the plan. But that building expenditure, if let's suppose that was avoidable, that was improper, infructuous, that is something which will not pass the criteria of a propriety audit. A transaction may satisfy all the regularities, all the requirements which are required to be applied when a financial audit is carried out. But still, such transaction may not be of any benefit to the entity, may be a waste towards the entity. So that is something which will be the perspective of the auditor when it comes to the propriety audit. Okay. Audit should therefore try to secure a reasonably high standard of public financial morality by looking into the wisdom, faithfulness, and economy of transactions. These considerations have led to the evolution of audit against propriety, which is now being conducted by the audit authorities with their routine function of the irregularity audit. It is hard to frame any precise rules for regulating the course of audit against the propriety. Such an objective of audit depends for its acceptance on its appeal to the common sense and the straight logic of the auditors and whose financial transactions are subjected to propriety audit. So there are certain principles which are required to be considered in case of a propriety audit. And even though we'll be talking about all of these principles, the basic perspective is very, very simple. And that is to ensure that the public interest is protected. In a very, very simple terms, if we can say what is going to be the approach, what is it that the auditor will look at when he will be performing the propriety audit? He will be looking at whether the public interest in relation to that particular activity was protected, safeguarded or not. So let's understand these principles. Auditor should check that the expenditure is not prima facie more than the occasion demands, and that every official exercises same degree of vigilance in respect of expenditure as a person of ordinary prudence would exercise in respect of his own money. That the authority exercises its power of sanctioning expenditure to pass an order which will not directly or indirectly accrue to its own advantage. That the funds are not utilized for the benefit of a particular person or a group of persons. That apart from the agreed remuneration or reward, no other avenue is kept open to indirectly benefit the management personnel or the employees or any other person. Yeah. So everywhere, what do we see? That it's all for the public cause, that a public expenditure is, that an expenditure is being incurred. If that's the case, then it will meet the criteria, that it will meet the criteria of a, that it will meet the criteria of a propriety audit. It will pass through the propriety audit. Otherwise, it will not be possible. Okay. Now, there are certain aspects of propriety audit which have also been touched upon under the reporting requirements for an auditor. And all of those aspects we have already covered when we discussed about the audit reporting. And we'll now get on to those aspects and we'll just try to correlate whether those are really the one which are proprietary in nature, or were those really limited to the financial audit. Yeah. So let's understand some of them. And these are not limited to the PSU. So we are now picking up some of the provisions of section 143.1. Provisions of section 143.1 is about the provisions which an auditor would follow in terms of his reporting requirements. So therein we see some of these aspects, and some of these aspects which we see over there are in line with the propriety elements. Let's understand the first one. Whether the terms on which secured loans, secured advances have been made are prejudicial to the interests of the company or its members. Okay. Whether transactions of the company which are represented merely by book entries are prejudicial to the interests of the company. Whether the investments of companies, I'm just reading out all of these points one by one, and then we'll have a discussion on that. Whether the investments of the companies, means other than a banking or an investment company, in the form of shares, debentures, securities, have been sold at a price lower than the cost. Now, in all of these three cases, what is it that the auditor is required to report on? He is required to report in his audit report in respect of such matters, even if it is not specified. Do you think auditor will report on such matters in his report? Of course, yes. Because if we read all of these points, they definitely pick up a financial perspective. They definitely are linked to financial information in a way. Correct? Because they are linked to financial information in a way, so that's why all of these aspects are important. But one thing which is attached to all of these points is what? Whether these are prejudicial to the interests of the company or its members or not. Whether these are prejudicial to the interests of the company or not. Whether the shares have been sold at a price lower than the cost or not. Because if this is done, if any of these activities, if any of these loans, etc., have been taken, have been given, and which is not to the benefit of the company and which is not to the benefit of the members of the company, then this is something which the auditor needs to bring out. Because The auditor needs to take care that each and every activity which the company has been doing, or the management has been doing, or maybe those charged with governance have been doing, they are all for the benefit of the company at large. And these are some of the points which have been specifically captured over there. Okay. Next, whether loans and advances made by the company have been shown as deposits. Again, considering the propriety element, rationalizing the proper disclosure of loans and advances given by the company is made. Yeah. Again, considering the propriety element, rationalizing the proper disclosure of loans and advance given by the company is made. So this aspect is again required to be captured over here. If the company has been giving the loans and advances, but those have been shown as deposits, this is again not appropriate. This is again not for the benefit of the company. Another thing which the auditor is required to comment upon, which the auditor is required to report upon, whether the personal expenses means maybe the personal expenses of the employees, personal expenses of the directors, which are not for official purposes, which are not for business purposes, those have been charged to the accounts of the company. Those have been charged to the accounts of the business. If this is done, this is again required to be reported upon. It's an accepted principle that the expenses which are not business expenses should not be charged to revenue. The effect of charging personal expenses to the business is to distort the profitability of the company and to secure a personal gain at the cost of the company. Obviously, propriety is involved in this. Charging personal expenses to the business account is highly improper and abusive. Hence, this provision is important to be considered. And basically, over here, what is it that we are trying to check? That these are some of the propriety elements which are not really limited to the financial domain, which are crossing the financial domain. That even if we talk about the audit reporting today, when it comes to the private limited company also, there are certain propriety elements which the auditor is required to look at. And same is the perspective, which is to a certain larger extent required to be captured by the auditor in case of an audit of a PSU. Okay. In case it is stated in the books and the papers of the company that the shares have been allotted for cash, whether the cash has actually been received in respect of such allotment, whether the cash has been received in respect of such allotment, and if no cash is actually received, whether the position in the books of accounts and balance sheet so stated is correct, regular, and not misleading. Yeah. Once again, this is one of the perspectives which is required to be considered by the auditor when it comes to the audit reporting. And there again, it reflects the propriety element which is involved in his audit. Correct? Yeah. There again, it reflects the propriety element which is reflected in his audit. Now, these are some of the principles which have been picked up from the main report. Remember the main report we discussed when we discussed about SC 700? There are 3 reports: main report, CARO, and then the IFC. Now, similar to some of these types of aspects which are captured in the main report and which have propriety angle attached to it, there are few areas which have also been covered under CARO. There are also certain areas which have been covered under CARO. And under CARO, all of those areas carry the propriety elements. So we'll now discuss those propriety elements as to what are those propriety elements. So we are just trying to see with the help of these points that propriety is something which is not really limited to PSU. To a certain extent, it exists in case of private limited company. So let's understand this. And please remember, as we have discussed earlier, that for all of you, it's CARO 2016 which is applicable. Yeah, so that's why you need to look at the presentation, please. Don't look at the study material. Huh? You need to go to the presentation, please. So let's understand these points. If the company has granted any loans, secured or unsecured, to another company, to firm, to LLP, or to other parties, which are covered in the register maintained under Section 189 of the Companies Act, where the terms and conditions at which such grants, means such loans, have been given are not prejudicial to the interests of the company. There again, what is it that we are trying to check? That such terms and conditions should be towards the interests of the company. Whether the repayment of the principal amount and the interest are stipulated, and whether the repayments or receipts are regular. Again, very, very important. Because if the repayments are not taking place, the loan has been given, but the money is not coming back. Is this beneficial to the company? Not at all. The interests are not being paid on time. The loans were given. Was that beneficial to the company? Again, not. For this, the auditor should take note of the repayment schedule. If loan agreements are not executed, any other equivalent documents may be referred to arrive at the terms of receipt of interest. For example, letter of undertaking, acknowledgement by the party of the terms and conditions communicated by the company, etc. All of these aspects are required to be captured and looked at by the auditor. Next, again, this is something which forms part of CARO. If the amount is overdue, state the total amount overdue for more than 90 days and whether reasonable steps have been taken by the company for recovery of the principal and interest. Now, this is again very, very important. Maybe the company gave a loan and which turned out to be not a good loan, but what is it that the company has been doing for its recovery? For its recovery, not only regarding the interest, but also the principal and on time. In making this examination, auditor would have to consider the facts of each case, amounts which are involved. It is not necessary that the steps to be taken must necessarily be legal steps. There could be various steps which may involve discussions between the auditor and between the management and the relevant party to whom the loan has been given. Maybe the legal part is not yet coming into the picture because the loan is still considered to be good of recovery, but all aspects, but all steps which the management would have taken is something which the auditor needs to understand. Auditor needs to take care of whether the management is doing that or not. Because this is again something which is towards the interest of the company. In respect of loans, investments, guarantees, and security, whether the provisions of Section 185, 186 of the Companies Act have been complied with. So this is all about ensuring the public interest, whether the maintenance of cost records has been specified by the central government, and whether such accounts and records have been so made. So wherever cost records have been specified, whether the company has been maintaining that or not properly. Because that is again for the benefit as around the costing procedures which the company is required to follow. Where the company is regular in depositing undisputed statutory dues, including PF, ESI, income tax, sales tax, service tax, all of these statutory dues. And if not, the extent of areas of outstanding statutory dues, which are outstanding for a period of more than 6 months from the date they became payable, shall be indicated. In addition, where the dues, where such statutory dues have not been deposited on account of any dispute. Maybe those are disputed. Maybe the department has claimed an amount, but the company is of the view that this amount is not payable. So it's a disputed one. Yeah, and this has not been deposited on account of any dispute. Then the amount which is involved, the forum where it is pending. Maybe it's pending at the commissioner level. If it's the income tax, it's pending at the tribunal level. It's pending at the high court level. So whatever is the level, so that is required to be reported there. Yeah. Next, if the company has defaulted in repayment of loans or borrowings to a financial institution, bank, government, or dues to the debenture holders, if yes, the period and the amount of default to be reported. In case of defaults to banks, financial institutions, government, lender-wise details are required to be provided. The auditor should obtain a schedule of repayments to banks, financial institutions, debenture holders from the management of the company. He should examine the agreement or other documents containing the terms and conditions of the loans and borrowings of the company from the banks and financial institutions. The auditor should also examine the debenture trustee deed. So all of these documents are important for what? For checking whether all of these defaults are intentional or not, or what's the reason behind it, whether this is beneficial to the company or this is of any or this is something which is against the interest of the company. Yeah. So we are not really getting into a detailed discussion of all of these related points. So that's not the objective. So we are just touching upon these points, as you all know, and we're just trying to see that all of these points also carry a propriety element. Whether term loans were applied for the purposes for which they were obtained. Maybe the term loan was obtained for a long-term purpose, but that's been used for working capital only. Maybe that was obtained for construction of a plant, but that's been applied by the business in its working capital. So will that be appropriate for the company? Not again. Will that be in line with the requirements or in line with the conditions basis which the loan would have been obtained? Not again. Okay, so all of these aspects are therefore required to be looked at by the auditor. There are the monies which are raised by way of IPO and the further public offers, and the term loans were applied for the purpose for which those were raised. If not, the details together with delays or default and subsequent rectification, if any, as may be applicable, be reported. Okay. Next, whether any fraud by the company or any fraud on the company by its officers or employees has been noticed or reported during the year. This is again what? This is again all about the propriety element, because everything in the organization should be fair. So if there's been any fraud, that is specifically required to be reported over there in terms of CARO, irrespective of the nature of the fraud, irrespective of the amount which may be involved in the fraud, something which we see in some other sections of the Companies Act, wherein the fraud reporting is determined on the basis of the amount. But here again, in terms of CARO, it's not something which is relevant from the perspective of the amount. All sort of frauds are required to be captured over here. Yeah. Next, whether the managerial remuneration has been paid or provided in accordance with the requisite approvals. So once again, if the managerial remuneration has been paid in excess of what is allowed, is that really beneficial to the company? Not really. Then some of the points which are related to NBFCs, which we have already covered during the course of our discussion related to NBFCs, and which is all towards maintaining their required capital ratios. Once again, because of the fact that the public interest is significantly involved in NBFCs. So when they will be maintaining their capital at a minimum level, they will be able to properly take care of their liabilities so that the interest of the public is protected. So this is again required to be reported upon by the auditor. Whether the company has entered into any non-cash transactions with the directors or the persons connected with him, and if so, whether the provisions of section 192 have been complied with. Yeah, so all of these aspects are what we see in case of audit reporting, which is still there and which is not something limited to a PSU. Yeah, there's something which we see in case of a private limited company also, whether it's about the main report or whether it is about some of the reporting requirements falling under the curve. Okay, so let's understand some of the problems which are attached to this propriety audit and how those are required to be really dealt with, to be taken care of. See, the problem which is attached to the propriety audit can largely be attributed to the approach which is required to be done. Propriety audit is not really the financial audit. When it comes to the propriety audit, we are not really looking at the numbers. We are not really looking at any rule or regulation. What's the approach which the auditor is required to follow? It's the public interest. Or you can say it's the interest of the company. It's the interest of the stakeholders of the company. That is what he needs to keep in his mind. And anything around it is something which we'll have to focus on. So this propriety audit has an inherent element of subjectivity, because it is very difficult to establish standards of public interest, commonly accepted customs, standards for conduct, which are not firm basis for audit evaluation. And for doing this, C&AG has developed norms of propriety for expenditure of public funds in our country. By laying down the standards of propriety for government expenditure, the C&AG has really tried to tackle in a practical way the complex problem of subjectivity which is inherent over there. Okay, so some of those things which are required to be captured over there are required to be looked at by the auditor when he will be performing the audit of PSUs, and he will be focused towards the propriety element which is involved in this. And as regards the propriety element, one thing which you'll have to consider once again will be the fact that propriety element will be all focused towards the performance audit. Okay, it's one of the aspects which will generally be forming part of the performance audit, and this is something which we'll generally not see more of in case of financial audit, except for some of those points which we discussed in terms of the main audit report and in terms of some of the points related to the curve. Okay, yeah. So this was all about propriety audit, and I would say a very, very important part of audit of PSUs also. Now what we can do is we can just move on to the next part of our discussion. Next part of our discussion in relation to the audit report of the C&AG. So we can just have a quick understanding around the audit report of the C&AG as to what all it should capture, what all it should cover. To facilitate a proper consideration, the reports of C&AG on the audit of the PSUs are presented to the Parliament in several parts consisting of the following. So there are certain parts. Let's understand what are those parts. First, introduction containing a general review of the working results of the government companies, deemed government corporations, and the corporations. Sorry, government companies of the government corporations. Results of comprehensive analysis, appraisals of the selected undertakings which are conducted by the audit board. So why we are saying selected? Because not all undertakings will be picked up. Yeah, so for comprehensive appraisal, maybe some of the undertakings will be picked up in 1 year, next year some other undertaking. So it's something which happens in a phased manner, wherein most of the large undertakings will be captured, small undertakings will be captured, medium-sized undertakings will be captured. Resume of the company auditors reports submitted by them under the directions issued by the C&AG, and that of the comments on the accounts of the government companies. So this is again a part of the audit report of the C&AG, because some of his directions which would have gone on, some of his comments which would have gone on as to how the auditor would have dealt with them, how the auditor would have responded to them, what all would be the outcome of the comments or the directions of the C&AG in relation to the audit. So this will also form part of the document or the report which will go out from the C&AG. Significant results of the audit of undertakings not taken up for appraisal by the auditor. So this is another one area which will be forming part of the audit report of the C&AG. For certain specified states, C&AG submits a separate audit report, commercial, to the legislature, while for other states or union territories with the legislature, there is a commercial chapter in the main audit report. The state audit reports contain both. They contain both results of the audit appraisal, results of the audit appraisal of the performance of selected companies or corporations, as well as important individual instances of financial irregularities, wasteful expenditure, system deficiencies noticed by the statutory auditors, and a general review of the working results of the government companies and the corporations. Okay. Yeah. So all in all, what you can see over here is that when it comes to the PSU audit, if I have to just quickly summarize all of these aspects. So who is the relevant authority? It's the C&AG. C&AG is the one which is getting this audit completed. Number one. C&AG is the one which is getting this audit completed. And for getting this audit completed, C&AG has got certain ways. So one is of course the normal audit, second is the supplementary audit, third is the test audit. And in respect of this audit of a PSU, the auditor is not really limited to the financial part. Auditor is also focused on the compliance part, and most importantly, required to be focused on the performance part. And this requirement will again be from the C&AG. C&AG will require this to be done. Having said that, when the C&AG will require this to be done or not, at times there are certain aspects which the auditor would anyways look at, which he would be looking at in case of private limited company. So same thing he'll cover over here also. The focus of the auditor is to ensure that the interest of the members, the interest of the stakeholders of the company is always protected. Correct? Clear? So with this, we come to an end to our discussion in relation to the audit of the PSUs. And now what we can do is we can just move on to our next topic, liabilities of auditor. If you have any questions around whatever we have discussed, please let me know. Okay, so now we'll move on to the next topic. liabilities of the auditor. Liabilities of the audit. Yeah. Now, in terms of the liabilities of the auditor, what do we mean? Or what is this aspect which is required to be covered over here? See, auditor carries a responsibility. And there's a big responsibility on the shoulders of auditor. And by auditor, we mean to say the auditor of the financial statements of the company. So we are talking about the statutory auditor. And in fact, this is not something which is limited to the statutory auditor. This may also extend to the tax auditor. This may extend to the GST auditor. Or this may extend to any of the auditor, because each and every auditor has been assigned certain responsibility. And considering the fact that the auditor has been assigned such responsibility, auditor is also given certain powers to ensure that whatever responsibilities have been assigned to him, he is able to execute them. He is able to fulfill them. And that's why such responsibilities also become his duties. Correct? So we can say such responsibilities in a way also become his duties, which he is required to ensure, he is required to fulfill. Yeah. And in case the auditor is not doing that, then it's not justified for the public. It's not justified for all those people who have shown faith in the auditor, for all those people, for all those personnel who have been relying on some of the information which they have considered to be audited, but over which auditor may not have done his justice in terms of performing the adequate and appropriate audit procedures. Correct? Yeah. Now, because the auditor carries this high responsibility, that's why it's very, very important on the part of the auditor to remain diligent in terms of all the activities auditor would perform. If the auditor will not be diligent in terms of performance of his duties, in terms of carrying out the activities, then it's something which is a negligence on his part. It may be intentional, it may be non-intentional. If something which is non-intentional, auditor should have good reasons for doing that. Maybe he applied his diligence, but within the given circumstances, within the given perspective, there was nothing much which he could do. So that is one area which will have to be understood as to whether that will tantamount to the negligence on the part of the auditor or not. But one thing is for sure, that it's a very, very big responsibility which the auditor cannot just simply run away from. And that's why there are certain liabilities which may arise on the auditor if he will not fulfill the desired task in a desired manner. So let's understand every person who enters into a learned profession like chartered accountancy undertakes to bring to exercise of it a reasonable degree of care and skill, and that is on the basis of knowledge he would possess. He does not undertake, if he is an attorney, that all the events he shall gain his case, nor does a surgeon undertake that he will perform a cure, or nor does he undertake to use the highest degree of skill. There may be persons who have a higher education and greater advantages than he has, but he undertakes to bring a fair, reasonable, and competent degree of skill, and that is on the basis of the skill set which he possesses, on the basis of the knowledge that he has got, yeah, and with which he cannot just simply run away. Now, as regards this, there are various mechanisms which are available to the auditor, and if the auditor is not found to be diligent in any of these cases, then what will be the implication? Implication will be very simple, that he may be held liable for any of those things. So let's understand about professional negligence now. Negligence, which is culpable, generally consists of under-mentioned three elements. Let's understand what are these three elements. Existence of duty or responsibility, occurrence of breach, loss or detriment. So these are the three things which are possible. As around the existence of duty or responsibility, what do we say? As around the duty or responsibility, what do we say? Auditor carries a duty, something we discussed. Yeah, because of the responsibilities which were attached to him, he was given certain powers and which led to his duties. So he need to fulfill his duty, which is owed by one party to another, to perform some act, and this act should be done with a degree of care and competence. So auditor cannot just say that, okay, I have carried out this task. No, the task has to be done with the right skill set, and that's why the auditor was the person who was chosen for this type of activity and not somebody else. Next could be the breach of this responsibility, or breach of this arrangement, sort of, which exists between the auditor and the stakeholders who are involved, or you can say various parties who are involved. So that occurrence of breach is again a sort of negligence. Third, loss or detriment. So it's the loss which the party may have to suffer. Why? Because of the negligence on the part of the auditor. Or you can say because the auditor didn't take due care, because the auditor didn't apply reasonable level of knowledge in carrying out a particular procedure, because the auditor was not diligent in terms of performing his various audit procedures in relation to the tasks which were assigned to him. So all of these losses, which may or may not be suffered by the party, who will be held responsible for this? Auditor, because that's a negligence on the part of the auditor being a professional. Correct? Yeah. So all of these aspects have been discussed with the help of few examples, and there are various scenarios which deal with this. So what I'll do is I'll take you to one scenario. Just give me 1 minute. I'll take you to one scenario to discuss some of these aspects as to how these are required to be dealt with. Okay, so let's understand this one. It's a sort of example, you can say, a small case study with which we'll just try to understand some of these requirements which exist on the part of the auditor, what they should have done, and if they would have not done, then what's the consequence. Mr. Dandekar had been engaged by Messrs. A. Mohammed and Company, Madras, and had prepared the statements of account and the income tax return on the basis of accounts produced to Mr. Dandekar. During the course of assessment, it was discovered that Messrs. Mohammed and Company had maintained two sets of accounts, regular day books and ledgers for open market transactions, and a separate book for the black market transactions, something which was illegal. While the former contained detailed entries relative to daily transactions, the latter contained only consolidated entries made at the end of the week of the transactions of that week. At the end of the financial year, all the weekly entries in the separate books of accounts were called up and were entered in the regular books of accounts. So these got mixed up. Mr. Dandekar had examined only the regular books of accounts of the XSE and prepared the statements of accounts and the income tax return on the basis of these units. All the statements were signed by Mr. Dandekar, and there was also endorsement at the foot of the balance sheet that it's been verified and found to be correct by Mr. Dandekar. Mr. Dandekar had forwarded these statements of accounts to the income tax officer, and while doing so, had stated particulars of books of accounts that he had examined. So he also stated that. So let's understand what was the consequence, what was the decision in respect of this matter. On examination, the statements of accounts having been found to be wrong, of course that was wrong, because it contained a mix of the regular transactions as well as the black market transactions. On examination, the statements of account having been found to be wrong, the income tax department took up the matter against Mr. Dandekar and filed a complaint with the ICAI. When the matter was subsequently considered by the Madras High Court, so that means it also went to the court of law, it was held that Mr. Dandekar was under an obligation to perform auditing with due skill and diligence. If he did that, it would be difficult to see what further obligations he had in the matter and in the favor of whom. The accountant is under a duty to prepare and resend correct statements of the accounts of the assessee, and he should, of course, neither suggest nor assist in the preparation of the false accounts. But he is under no duty to investigate whether the accounts prepared by the assessees are correct or not. The charge is that he owed a duty to the department to himself investigate the truth and correctness of the accounts of the assessee, and not merely to act as their post office in transmitting them. We do not agree that the respondent is under any such duty to the department, and therefore no question of negligence arose in this scenario. Okay, clear on this part? Yeah. Next, Next is about the breach of duty or negligence. Breach of duty or negligence is again something which is not allowed on the part of the professional. To charge a professional man with breach of duty or negligence, it's necessary to prove that there's been a deviation from the standard of care which we was expected to exercise in the performance of his duties. A professional man does not guarantee the success of his professional effort. Nevertheless, he is expected to possess a certain amount of knowledge and experience, and he must exercise a reasonable degree of care and skill for the performance of his duties. If there is any default or failure in the conduct of an audit or in carrying out any other engagement judged by the professional standards, the person responsible therefore would be guilty of negligence. So in simple terms, if I have to just take an example, let's suppose audit of financial statements is going on, wherein we understand that all the auditing standards are required to be applied. So we are saying financial statements of a company are getting audited, wherein we understand that all the auditing standards are required to be applied by the auditor. Now in this case, let's suppose this auditor doesn't know 3 out of all of these auditing standards. He has not read them. So can we say that will be a breach of duty or a negligence on his part because he didn't know them, so that's why he didn't apply? Of course, yes. Why? Because when the auditor is auditing the financial statements, a desired level of knowledge is expected out of him. He is considered to be having knowledge of these auditing standards. And if he didn't know about it, he should have ensured that he reads the auditing standards and then apply the auditing standard for the audit of the financial statements. He cannot just simply say that whatever he knew, he applied. Something which he should have known and which should have been applied got missed. So that is again considered to be a negligence on his part, because that's the desired level of quality which is expected from the audit of that auditor. Okay, so we can say the auditor being an expert skilled in the techniques of accounting and auditing. In fact, auditor is not only expected to have an understanding, he is considered to be an expert. You are a chartered accountant, so you will be considered to be an expert of accounting, considered to be an expert of audit. Is expected that he would be in the possession of certain standards of knowledge and experience. He also must exercise the same degree of prudence, skill, care as any other professional person in similar circumstances. Would be expected to do. Or in other words, what do we say? He must carry out audit according to the accepted professional standards. The auditor, however, is not expected to be detective. Now, this is very, very important. As we have seen, that audit is something which is carrying some limitations. Audit is driven by the auditing standards, no doubt. But those auditing standards, certain legal requirements also place a restriction on the auditor. So audit is not an investigation. Audit is not a detection. Audit is not expected to be a detection. So auditor is therefore not expected to be a detective, nor is he required to approach his work with a suspicious or preconceived notion that there is something wrong. He is a watchdog, but not a bloodhound. However, if there is anything that excites suspicion in him, he should deep dive into the matter. So auditor is not there to detect, but let's suppose if he suspects something fishy, he should definitely inquire into it. Therein he will not say, no, this is not my job. If suspected, then of course he needs to get into the detail. But in the absence thereof, he is only required to be reasonably cautious and careful, and that is something which is expected out of him on the basis of his knowledge, skill set. Yeah. In case of non-company audit, where a detailed audit is not required, the scope and extent of routine checking that must be carried out is determined on a consideration of the nature of the engagement. So that is again expected out of the auditor, and all of these expectations are clearly laid out in what? Engagement letter. So the scope, everything has to be clear in terms of whatever is required to be done on the part of the auditor. Yeah, clear on this? So these are some of the generic things which we have discussed. So now what we will do is we'll look at some of the liabilities, some of the civil liabilities which may arise on the auditor as per the requirements of the Companies Act. Let's understand those liabilities now. What are those liabilities which may arise on the auditor? Damages for negligence, something we just discussed. Civil liability for misstatement in the prospectus, very, very important document. Whenever any prospectus goes out, public is interested in this document. Yeah. And the information which goes out in the prospectus, and which is something which the auditor is required to look at, it's considered to be of high importance. That's why if there is any negligence, this may severely impact the public interest, and that's why it's a very, very important document, and over which auditor needs to be thoroughly diligent. Civil liability for misstatement in prospectus, where a person has subscribed for securities acting on any statement in the prospectus which is misleading and has sustained any loss or damage, the company and every person who shall, without prejudice to any punishment to which any person may be liable to pay compensation to every person who has sustained such loss or damage. Number one. No person shall be liable under subsection 1 if he proves that having consented to become a director of the company, he withdrew his consent before the issue of the prospectus, and that was issued without his authority or consent. That the prospectus was issued without his knowledge or consent. That as regards every misleading statement purported to be made by an expert or contained in what purports to be copy of or extract from a report or a valuation or an expert, it was a correct and fair presentation of the statement, and he had a reasonable ground to believe, and did up to the time of issuance of the prospectus believe that the person making the statement was competent to make it, and that the said person had given consent required by the relevant section to the issue of the prospectus, and had not withdrawn the consent before the delivery of the copy of the prospectus for the registration. Only in such cases his liability will not arise. Yeah. Further, where it is proved that a prospectus has been issued with an intent to defraud the applicants, every person who is referred to in subsection 1 shall be personally liable without any limitation of liability for all or any of the losses or the damages that may have been incurred by any person who subscribed to the securities on the basis of such prospectus. Okay. Clear? Next is the liability for misfeasance. So what is misfeasance? This implies a breach of trust or duty. So let's understand this. The auditor of a company would be guilty of misfeasance if he has been held guilty of any breach of trust or negligence in the performance of his duties, which has resulted in some loss or damage to the company or its property. Yeah, for example, we can look at this case. The auditor who does not report to the shareholders the facts of the case when the balance sheet is not properly drawn up is guilty of misfeasance. Yeah, because that's his duty, that's his responsibility. So auditor is supposed to fulfill his responsibilities, ensure that all of his duties, all of his responsibilities are fulfilled by him. Correct? Moving further. Now, other than the civil liabilities, there are also criminal liabilities which exist in relation to such negligence, etc., under the Companies Act. So let's go on to those criminal liabilities now under the Companies Act. First, criminal liability for misstatement in the prospectus. As we have discussed, prospectus, or you can say IPO, is a very, very important event and a very, very significant event as far as public interest is concerned. So that's why a thorough diligence is required to be done, not only by the management, but any professional who is involved and who is working on that. Because this may have severe implications later on if any of the information goes wrong in this document. So let's understand about these requirements now. The circumstances in which an auditor can be prosecuted under the Companies Act and the penalties to which he may be subjected to could be related to the criminal liability for misstatement in the prospectus. Where a prospectus is issued, circulated, distributed, and it includes any statement which is untrue or misleading in form or context in which it is included, or where any inclusion or omission of any matter likely to mislead is given, every person who authorizes the issue of such prospectus shall be liable under section 447. So 447 is all about penalties. However, this section shall not apply to a person if he proves that such statement or omission was immaterial, or that he had reasonable grounds to believe and did up to the time of issue of the prospectus believe that the statement was true or the inclusion or omission was necessary. Okay, next, punishment for false statement. If in any return, report, certificate, financial statement, prospectus statement, or any other document, which is required by provisions of the Companies Act, a person makes a statement which is false in any material particulars, knowingly that it's false, or which omits any material fact, and that fact which has been omitted was material, then such person shall also be held liable for the criminal liability under section 447. Next, of course, is a very, very important thing, and that is about punishment for fraud. Fraud, we have talked about fraud previously also, but fraud is something which is a very, very important thing required to be taken care of in respect of any task that we do, and that is something which is not really limited to the auditor, of the management, or any of the personnel who is engaged with the organization. So let's understand about this. without prejudice to any liability, including repayment of any debt, or any person who is found to be guilty of fraud involving an amount of at least 10 lakh rupees or 1% of the turnover of the company, whichever is lower, shall be punishable with imprisonment for a term which shall not be less than 6 months, but which may expand to 10 years, and shall also be liable to fine which shall not be less than amount involved in the fraud, but which may extend to 3 times the amount involved in the fraud. So you can just understand how serious is the implication. Yeah. So the implications could be very bad in case of a fraud. And fraud, as we all understand, it's very, very important that all of these things are taken care of. Yeah. Where the fraud involves an amount less than 10 lakh rupees or 1% of the turnover of the company, whichever is lower, and does not involve public interest, any person guilty of such fraud shall be punishable with imprisonment for a term which may extend to 5 years, or with fine which may extend to 50 lakh rupees, or with both. Yeah. So even in the other case, the penalty for the fraud is going to be significant. It's going to be huge. Correct? All of you clear on this? Yeah. So quickly, what we can also do is we can just look at quickly on the cases which are concerning the misconduct of auditors under the Chartered Accountant Act. Quickly, we can just touch upon this. So what I'll do is I'll just pick up this case of insurance versus H.C. Das, just to give you some insights as to how all of these cases would have been dealt. Yes, so let's understand the findings. In this case, action was brought against Messrs. H.C. Das and Company by the central government in the matter of audit of accounts of Bhagya Lakshmi Insurance Limited. The auditors had audited the accounts of the company from 36 until 51 and had issued certificate required under the first schedule to the Insurance Act. On appointment of the administrator, subsequently, a number of irregularities were discovered. The principal defense of the auditor in respect of the charges was that he had relied on the statements of the management in regard to the matters which are included in the statement certified by him. So let's understand what was the judgment, what was the outcome. During the course of the judgment, it was observed an auditor is not only bloodhound, but he is not also an insurer. He does not certify the absolute accuracy, he is certifying the reasonable accuracy of the accounts, which he audits and approves of, but only says that he has taken possible care and exercised reasonable care, reasonable skill, and having done so, has arrived at the conclusions which are recorded in his certificate. But if, as we find to our regret to have been the position here, an auditor does nothing at all in the way of scrutinizing the books of the company, but only relies upon the statements made to him by the management, as his own case find it impossible to hold that he exercised any skill or care of any kind. So the auditor didn't perform any procedure. What did he say? That whatever information management provided to me, I looked at it. So that's of no use. He is required to scrutinize, he is required to perform procedures. An auditor who construes his duty to the shareholders or the policy holders too narrowly like this, and who passes and approves of whatever is stated to him by the management of the company, whose accounts he was auditing, does not serve the shareholders with loyalty or efficiency which is expected out of him, and therefore constitutes, instead of source of security, a positive danger to them. Therefore, in such a case, auditor was held guilty of gross negligence. So that's why whenever we look at any information which is provided by the management, it's not that we can just take that information and use it as it is. It's required to be audited. Auditor is required to perform procedures on that. Okay, clear on this? Yeah. And after this, then I think we are left with some more liabilities which arise out of the company, from this Income Tax Act, which we can discuss in the next session. And in the next session, we'll also be starting with a new chapter. All right. Yeah. So with this, we can just end our discussion for today. And I would just request all of you to please make sure that you go through some of the case studies, particularly in relation to all of these liabilities that we have discussed. Yeah, because some of the liabilities we have discussed, but all the case studies we have not gone through. So the more and more case studies which are there in the study material, if you go through, you will get more clarity around it. Yeah, so that's beneficial to all of you. So I would just like to thank all of you once again for your time and for your wonderful participation today. Thanks so much. Let's meet in the next session, and we'll also start new topic in the next session. Thanks so much.